Now, there's a common misconception that I'm doing something special when I'm actively trading Cheltenham. And you see some of the big results that I'm banging and you're sort of thinking, well, exactly what are you doing to do that? Well, part of the reason that you get these big results is because the markets are just that much more suitable. And in fact, most of the underlying characteristics that you see within the market are very similar to what you see on a day-to-day basis. However, you have to adjust it slightly to account for what you're doing at Cheltenham. But if you want to know the sort of things that I'm looking for, then just watch the rest of this video. So I should start the video by pointing out some of the things that are different at Cheltenham. And the big one is the amount of volume that you see within the market. On each individual point on the ladder, you will see large amounts of money. You will also notice that there's a lot of money going through, millions per race. So it will feel very different from your day-to-day racing. But that actually works to your advantage, I think, because you're looking at a market that's sort of operating almost in slow motion. You can see the orders coming in and going out. You can see how it influences the price. And that's why I like trading Cheltenham, because I find it a little bit easier to trade, which is why I get such a high strike rate. Last year, I won on every single race at Cheltenham, not only on Betfair, but also on BetDag. And part of the reason for that is I find the markets much more readable. If you're looking at a lower grade race with very little liquidity, the market tends to move much sharper on lower volume. So a big order in a low liquidity market will move it quite a bit, but in a big market like Cheltenham, it won't move it much. And therefore you get more time to have a look at the market, understand what those orders are doing, and be able to act upon them. But also you do actually get more time to trade them. So, there are things like the first race of the day I always find hard, especially on the first day of Cheltenham, because there's no sort of oomph running through it. There's no theme. You don't know what jockey or trainer is in form. All of the money's been there for ages. And therefore, there's not a great deal to do. If I'm going to get tripped up on one market, it will be the first race on the first day. And then subsequently on each day, the first race of each day tends to be a little bit harder. But once the day gets underway, you tend to find that the market tends to flow a lot better. So if you want to avoid a loss, don't trade the first race of the day. You'll probably find all of the other races much, much easier. But also, when we are at a big meeting like Cheltenham, the liquidity runs for much longer. So when that previous race is finished, money arrives in the market for the next race and it begins to build and build and build and build. And of course, it peaks towards the end or when we get close to the start of the race. But, that is quite a natural thing to occur. Because there's so much money matched at Cheltenham, you can actively trade it for much, much longer periods. So if you're looking for one reason that I produce much bigger results there, it's because the markets are much more readable, but also the liquidity is there for much longer. So it makes the market and the opportunities or the chance of finding an opportunity within the market just that much higher. Those are the sort of core underlying characteristics as to how Cheltenham trades a little bit differently from your day-to-day racing. But let's actually have a look at some of those specific markets and how they trade. So when we look at this first video, what I'm going to do is just replay this market for you in the background. It's important to understand that when we come across a competitive handicap, the market moves within a narrow range. So you can see it's quite a narrow range that we're moving within this particular market. And the reason for that is when you get a competitive handicap, nobody really knows who's going to win. And that's good because that's how the handicapper set it up. In theory, with a handicap race, all the horses should cross the line together because they're apportioned weights according to their ability. And the net effect of that is that you tend to find the market gets stuck within a narrow range. And at bigger meetings, it gets stuck within a tiny range. And at smaller, lower quality meetings, that range tends to be a little bit bigger, but nonetheless, it does tend to stick within that particular range. So you've got a problem on one side, but a benefit on the other. And one of the problems is that the market isn't going to move much in terms of odds direction. And in fact, if you say to me, where are the odds going to go in this market? I've got a great answer for you. I have no idea. And the way that I trade these markets is I will go in, I will do a make market, I will offer money to the market. I'll go for little one tick gains. And the reason that I'm doing that is because I'm not expecting the market to move by a large amount. So I scale my trade appropriately. I don't particularly have an opinion on how many ticks it's going to go in one direction or the other, but I do know that If it goes up to the top end of a range, then it's probably going to start coming back down as it attracts backers, and the opposite at the other end of the range, but it will be within that tight range. So my expected gain is going to be small. So I'll go for a small expected gain, and I'll try and do that as frequently as possible. Where I'll abandon a trade in a market like this is if it breaks out of that range above or below, in which case I know that there is money going for it, and therefore I'll decide to stop at that particular moment, or I'll try and hunt for a runner that is staying more typically within its current traded range. So yeah, when you see a competitive handicap, not just at Cheltenham, but in other markets, that's sort of what tends to happen. It tends to stick within a range. You don't tend to get money going for one particular runner or another, and therefore you adapt your trading style to take account of that. You go for small gains as often as you can, and if a trend starts to develop in the market, then you would probably cut your position at that particular point. So yeah, that's the way that these sort of markets trade, and when you see these sort of markets, whether it's at a Cheltenham or at a lower quality meeting, that's the sort of way that you trade it. But the benefit that you have at Cheltenham is that you can use larger stakes and you can do more trades because the market stays open for just that much longer with much higher liquidity. And that's how you would typically trade a market that you see here. Now, when we look at a market that is at a much shorter price, so you can see that this is at evens, this is at decimal odds of 2, you have to adapt the way that you trade, because the first thing that you'll notice is it has a much wider traded range. And rather than try and sort of narrate you through the nitty-gritty actually on screen, it's probably better that I narrate to you just by voice only and highlight some key characteristics that I see in this market that will influence how I will trade it. So because of the shorter price, we're sort of committed to trying to find a direction in this market, and we need to look for clues to that. And you can see a couple of things on here. The money's going to be focused on the front two because they're at short prices and it's pointless on the rest of the field. And you can also see that on the favourite we're near a crossover point, and typically you would lay at a crossover point, but on this particular occasion the issue that you've got is that it's mid-range, and at the bottom of the range you may catch a bounce, at the top of the range you may catch a breakout, but mid-range you're looking at the total traded range and you're sort of saying, well, it could sort of go in any direction from there. But also the sort of things that you should be looking at are the amount of money on the back and the lay side and where that money has been matched, because that will give you good clues as to where the price is likely to go and which runner you should be trading. So if we look at the favourite here, you can see there's the best part of 55,000 at 2 and 204, and there's just over 30,000 at 199 and 2, and there's a 3% difference in the amount of money matched between 2 and 202. On the second favourite, there's about 30,000 at 224, 226, significantly larger amounts down there. You don't need to do many calculations to do that. And there's a 20% delta between the amount of money that's been matched at 222 and 224. So those are the sort of things that you're looking at to try and put the trade somewhat in your direction. You need to have a good idea of where you think the price is going to go. It doesn't mean that it will definitely go that way, but by doing the simple analysis and watching the market for a few minutes will give you an indication as to whether people are willing to back or lay at the current prices. And when you look at markets at Cheltenham, it does this in slow motion, so it enables you to look in much greater depth into the market to understand exactly where the order flow is, what people are backing, what people are laying, and that will give you a clue as to where the direction of this market is headed. Once you've established your interest in the market and things that you're looking at, then you're beginning to start to look for changes in those to give you a clue as to where the price is likely to go. And if we speed this up, you'll be able to see exactly what changes are taking place and how that has influenced the market. So what you see when we're looking at this high speed video is if you look at the odds at 2 and the amount of money that's getting matched at that point, it's beginning to grow, and especially in proportion to the amount of money at 202. So it looks as though it's about to break down, and that will necessarily influence the second favourite. So you could have backed the favourite, although you may not have liked to do that if you're familiar with trading at a crossover point, or you could have laid the second favourite here in order to get a decent trade and take advantage of that differential you saw on the favourite. So this is what a typical race at Cheltenham will sort of look like. But the thing that you should have a look at in this particular market is the amount of money that is being traded on the second favourite. Despite being at a higher price than the favourite, you can see there's a lot of money holding up the price. So if one of these two £10,000 breaks, then that could be a significant move underway. So as I've mentioned in this video, the markets move in slower motion. It gives you more time to digest what's going on within this particular market. And what you're looking at is at 3.35 and 3.4 in this particular market. We're looking very closely at the short-term traded volume that we can see on the right-hand side here. You can see there's reasonable amounts of backing going on at 3.35 and 3.4 on the second favourite. If we look at the favourite, you can see that there is more money coming at 2.76. So you can see fairly substantially there that the favourite appears to be being backed. But you can also see that that's happening on the second favourite. And you really can't have both being backed at the same time. They tend to interact quite closely. So if you're looking for a clue as to which is going in which direction, what's happening in the short term. But the most interesting clue that we got on this market was what happened next. So we're a little bit further on now, and we can see that the favourite is gradually getting more and more support. And if we bring our focus to the second favourite again, we can see that there's a slight imbalance here between the amount of money waiting at 3.35 and 3.4. You can see that's been corrected now. There's equal amounts, and then bang, you can see there was a big order went through at 3.4. That's shifted the price up by one tick. It's made an increase on the amount of volume, but that's also spread across 3.4 and 3.45. This tells us that somebody went in at this particular point in the market and placed a large lay order at 3.4. And you can see that that has set off a bit of a drift. And it's this sort of information that we're looking for. We're trying to assess what's happening on a short-term basis, what type of activity there is in the market. And this tells me on this particular race that the favourite is being backed. The second favourite's quite weak, and people are beginning to oppose it right now. So yeah, these are the sort of things that you would do, the sort of things that you'd be looking at when you're trading a market in this particular manner. But yeah, we can see that somebody actively laid the second favourite there, and if this volume on the right hand side continues to push in that direction, then we can expect the second favourite to drift. And the big advantage for us on this particular occasion is that the favourite is being backed anyway, so that lends weight to this particular position within the market. So what I'll do now is I'll speed up the video so you can see how the market sort of transpired from here. And it's very often a good thing to do to watch higher speed videos, because that makes the trend look smoother than if you're looking at it on a very short-term basis. So yeah, let's have a quick look at what happened to this market on the way to the official offer. So the strategy I'm going to talk about now, I've talked about before. It occurs on a frequent basis. All you need to do is just have your eyes open. And in fact, you don't even need to do that now. I'll talk about that in a second. But basically, when we look at the first race of the day, typically there's no theme to it. But sometimes a theme will develop. And I have talked about this before. But on this particular day, the first winner of this particular day, it was a horse trained by Willie Mullins and ridden by Paul Townend. It was Vauban. And as a consequence, when we look at the activity on the next race after that, there was a little bit of backing activity for, I think it was Stateman, if I remember correctly. I'm pretty sure it was. That pulled in the price a little bit, simply because of the fact that Mullins Townend had won the first race of the day. And when we get to that particular stage, and Stateman actually went on to win that particular race, then what do you think happened on the third race of the day? If we want to make money by trading, we want to back at a higher price than we lay at, or we want to lay at a lower price than we back at. If we think that the price is going to come in, if we think people are going to back the horse, we would back it at a higher price, trade out before post time, and hedge our position. So you could have done this trade as well. It didn't require anything amazing to do it. You would have seen that combination come in for the first two races, and you would have known that money was going to go for that horse in the next race. It didn't take a genius to be able to work it out. You just needed to be able to watch TV. And in fact, you didn't even need to watch the TV, because BetAngel can do that for you. If you go onto the forum, you can download a little piece of automation that will automatically alert you if there are two winning combinations of a jockey or a trainer and it will alert you to the fact that that has just happened, so that you can look at the next race and jump on that sort of an opportunity. But in fact, if you're watching the race, you would have known fairly soon what was likely to happen in the next race, and you could have told me exactly what I was going to do. I was going to back the Mullins runner in the third race. We've looked at a couple of different strategies. There are many different ways of trading the market, but I always think that if you're alert to these sort of opportunities, even if you have no trading skill whatsoever, these are the sort of opportunities that you can take advantage of. It's happened more than once on this particular day, and I have highlighted it before, and I have highlighted it at other meetings. But if you're alert to these opportunities, this is surely the simplest way to be able to do some Betfair trading and being able to profit regardless of what actually happens in the race itself. So what I've tried to do in this video is give you a quick overview of Cheltenham and some of the markets at Cheltenham and what you're likely to see, and more specifically, what my view on how to trade it is. And, it's not that dissimilar to the sort of thing that you see on day-to-day racing, but of course there's a lot more volume at Cheltenham. And, I do get bigger results at Cheltenham and I can use bigger stakes. But part of the reason that I tend to get better results at Cheltenham is because I find the markets much more readable. They're slightly slower and less sort of violent, for want of a better word, than a normal racing market. And that just gives me that little bit more time to be able to identify exactly what's going on and to be able to act on it. And that's what I've tried to show in these videos, is several different markets, the way that I would approach those particular markets and the sort of things that I'm looking for. And of course, now and again, you do get these big moments that occur, like that Mullins gamble, that really do set the markets on fire. And that's not going to happen every year, but when it does, it's an absolutely first-class opportunity. So yeah, I hope that video has been useful for you.